just you watch. I'm stepping into fate. There is no time to waste. I've got that lightning inside me. This is how legends are made.
Hello, everybody. Um, Time for a daily review, and today is Sunday, so we'll also have the Sunday prep. Um, let's just hop right into it. Now, I do a lot of my work to find levels and such on TradingView charts, simply because I use several indicate ICT indicators from Lux Algo. And they haven't gotten everything that I use ready for NinjaTrader just yet. Um, I am a user of Gamma X trading tools, and it is an amazing suite of tools, including the Auto X bot that can trade for you. Um, the Generator X, which is where you can set up your own strategies and your own indicators to print signals for the Auto Xbot to use, um, and not just your own as in you made them, but any indicator that can be on your charts that can plot a signal, you can use in Generator X to then have the bot trade it for you. Um, Gamma X also has a lot of their own indicators that you can use as well for certain things. So I'm a real big fan of their tools. I will be putting a link to their website um, and their Discord down in the comments. So definitely check them out um, and see what it's all about. I think you'll pretty much enjoy it. Um, so um, let's just hop right into the Friday review first, and then we'll move into the Sunday prep for next week. Okay. So Friday's price action was fantastic, which I wasn't expecting myself after, uh, you know, I was expecting it until 8:30 when non-farm payroll news was supposed to come out, and they canceled those numbers because of the government shutdown. The Bureau of Labor Statistics office is closed, so the numbers weren't put out. At that point, I wasn't expecting a whole lot on the day. Um, the market proved me wrong. Uh, Earlier in the day and the day before, I had taken a couple of trades and uh, caught some losses. So I was down about $450 in the account before coming into Friday. So that's just a little setup of what had happened. Um, and then Friday came around and we got a pop right off the open. Okay. And, my I trade based on ICT levels on higher time frames, but I enter the trades based on SMA rules, okay? Um, Simple moving averages. Um, and right off the bat, off the open, we popped uh, from a narrow state. We manipulated down and then we popped straight up and closed above all three of my moving averages. I used the 9, the 21, and the 200. So as soon as we cleared and closed above all three moving averages, I went long. So on this 932 candle, so around 934, um, because I use a 2-minute chart, I entered the long. Okay, and I was looking for price to get to the all-time high, um, and it did that. I believe that was right here. So I exited the trade here and not only made back the $450 in losses that I had taken previously, but ended up uh, up 300 and I think 330 something dollars on the day. Now, this could have very easily been a three to $7,000 day, depending on how it was traded, um, all in all. But number one, it's Friday. Number two, we didn't get the numbers out that I was looking for to actually move the market. And so I had just decided, at that point, I was very happy with $300 profit on the day, and I just called it a day. Turned the computer off, and I went to the golf course to practice my short game. So, you know, that was that was pretty much it. But once we got this pop and we started heading for all-time highs, now once we get past the all-time high, people say, well, how do you know how far the market's going to move at that point? Well, there is a way to find out, and that's through standard deviations. So before I shut the computer off and left to go to the golf course, I put on a deviation chart or deviation fib. Okay. So, and I use the 15-minute time frame for this. So we go from the manipulation move uh, there to the top of the manipulation move here. Okay. Um, and, you know, I was asking, I don't think that's right. Hold on. Pop this out a little bit and do that. Okay. Yep. That's not quite right. I'll put it there. And I believe that was the high. Yep. Okay. And there. Okay. That's it. That's perfect. So we had pretty much reached up into the two standard deviations to break the all-time high. Um, and as you can see, we went right up to, after that pullback, we went straight up to the 3.5. And then we had our pullback to the 15-minute 9, and then we pushed back up and made it almost to the four deviations. Okay. And then we pulled back for the rest of the day with two deviations, the all-time high, acting as a little bit of support there before we finally broke down below it and finished out the day. So, this was a really good is a really good way to see, how far can you go when you break an all-time high. Deviation lines are definitely going to give you some levels to play with. Um, and I usually expect three to four standard deviations. Now, I don't know if that's going to happen, all at once. You just have to kind of watch price action. And basically, if you uh, take those deviation lines and you overlay them into uh, your lower time frame chart, then you can see uh, how you could trade these lines, right? So we pop there, come down, pop a little bit of resistance, and then we fair value gap through it. We're going higher. We had just a small 2-minute hiccup at the 2.5, pushed through, fair value gap above the 3, went up to the 3.5, and started getting our reversal there. Okay, ended up closing below the 9 there, closing below the 21, and came back down just past the 2.5, popped back up, and retested after the close above, and then kept going. And our SMAs were back in line again. Now, when we hit the 3.5, we know we got a reaction at 2. So now we're a deviation and a half past that. We can expect another pullback. You could actually trade once you get below the 9, back down to the 2.5 and close your trade there. Um, or you can just wait and see if this is just a pullback and wait for the confirmation to go higher once we got back above the 21 SMA, okay, and traded that up to the 4 deviation, okay, and got out up here. And then again, you get a really strong signal here out of a narrow state between these two. You could have entered there or waited. That's a pretty big bar. Wait for the pullback. We come to the 21. We hold the 21. We get a color change off the 21 for confirmation. You could enter the trade there. and take it back. Oop, I didn't mean to grab the deviation lines, but I'm going to go ahead and take those off because we really don't need them anymore. And trade that back down to the 200. Okay. So those three trades right there, or four trades, the trade up, could be five trades if you traded to here, got back in, two trades, three trades, four trades, five trades. Okay. So you could have had five trades on the day if you broke them all down into separate trades, but that would have been a really good, it was a really good price action day. We just took our win right off the morning, being a Friday, and started our weekend. So, um, but what Friday did do for us is it gave us some new levels. Okay. And that's what I want to go over today for the Sunday prep. All right. Um, Now, I use ICT levels, like I said, on a higher time frame to find the levels I want to be trading at. And the first thing I do is work with a dealing range. Okay, so a dealing range is nothing but a manipulation move. So it is a sweep of a swing high or low that then runs and takes out the opposite uh, swing high or low. Okay, so if we take out a swing low, that move then has to move up pretty quickly to take out a swing high, and that would give us a new dealing range, right? So it was right here. So on the second, on Thursday, we swept this uh, swing low right here, and we immediately popped back up and took out the swing high, okay, on this candle here. So that offered a new dealing range, okay. Um, and this was also because we did close on this bar here above the high, you could have a dealing range on that bar alone, right? What I'm looking at is the very next bar that tells we pull back into a 4-hour breaker bar at an order block, okay? And we tap the midline and go straight back up to close outside of the breaker bar. This wick right here coming into the break, hitting the midline of the breaker bar and then finishing that high off with that big of a wick tells me we're going to go higher, right? Um, but as soon as you do, take out the low and then you go and you take out the previous high, now you have a dealing range, okay? So I have these templates set, and I call them quads because we break them into quarters, okay? So this would be the first dealing range that we have, okay, when this candle finishes on October 1st. And as you can see, we did go up and we broke that dealing range. So when we break it, we just move up a little bit because we haven't broken the low. So as long as we're moving up without sweeping a low, then we still have the same dealing range, right? Um, so we were here, and then we come down and we sweep the low. You can also see that the midline of that breaker bar was also the midline of this dealing range once it was completed. And we would move that up every 4 hours until we get a new dealing range in, okay? But that shows you that would have been a perfect candle to get into a long in that 4-hour candle when it got down here because these are perfect levels to trade at, the 50% mark and the 50% of a breaker block, right? Um, so that's that. Well, then we on this bar that comes down that we would have gotten into sweeps a swing low, and then goes and takes out the swing high. Okay, so we have a new dealing range right here. And then we start moving up. Okay, and we finally end up with, on Friday, a dealing range like this. Now, what I'm looking for specific things here to tell me that my dealing range is now pretty well set for a pullback um, to then either go higher or start the uh, sell side of the market maker model. Sorry, but we don't. This isn't our dealing range low anymore because we swept the swing low and took out a swing high. So this is now the bottom of our dealing range right here. Okay. Now, how do I check to see if this is a correct dealing range? Well, all you have to do is move down to a lower time frame, and I use the 15-minute for that. Okay. Now, this chart is a 15-minute chart, but the order blocks and fair value gaps that you see on here, well, let me point them out. These blue fair value gaps, the bullish gaps, and the bearish gaps, orange ones, these are on a 1 hour time frame. Okay. These order blocks that you see with the dashed lines, these are 15-minute order blocks. The breaker bars are 15-minute breaker bars. Those are indicators where I don't have the ability to show higher time frame levels, but I do have an ICT indicator on here where I can see higher time frame levels on a lower time frame chart. So we have the best of both worlds here, right? Okay, so what I'm looking for is for ICT PD rays to be created at these uh, dealing range levels. And what happened here, if you'll notice, is that we have a 1 hour fair value gap right here at the 0.75 dealing range. Okay, so that was created on the way up. Now, remember, all these were created on the way up before we got here and actually put our dealing range at this high. Okay, because this 4 hour high happened on uh, Friday morning. Okay, so this fair value gap was created on Thursday. Okay, now, so now we have a fair value gap and a breaker block at the 50% level. We have a fair value gap and an order block at the 25% level. Okay, so this is looking really good. All right. Um, so right now I'm very comfortable with this dealing range for next week until we break the high and move our dealing range up a little bit. And I suspect that's what's going to happen, and I'll explain that to you. So we've initiated a new market maker buy model. Okay. And how do I know that? Well, every market maker model, whether it be a buy model or sell model, because there's two sides to every model. There's a buy side and a sell side. Um, every market maker model starts with an initial consolidation. Okay, and this is our initial consolidation right here. All right, that happened throughout the first and the second until we got to the New York Open, where we manipulated to the high side, then to the downside to sweep liquidity on both sides of the market, only to run higher than the top manipulation. Okay, and that tells me we are now in a buy model. All right, so we're looking for prices to move higher. What we want to trade on is when price comes back into key levels and then look for our longs to follow the buy side of the market maker model. Okay, so um, this is great because also what will show you that you are in a buy side or sell side of a model is when you break out of the initial consolidation, you will have this breakaway gap, okay? And that is the gap that's made when you leave the consolidation, right? We didn't have a gap to the downside, right? We had a gap to the upside in the manipulation move. Then we slammed down to take out all these longs that got in on these candles and all the stops that were below the lows over here, okay? And we took all those out and then we ran back up to take out all the shorts that had jumped in on this move down to then be able to push the market higher. Okay. Um, so where, if I'm thinking that this isn't the all-time high for a while, where do I think price can actually move from here? Well, there's a good way to measure that. And again, it's the deviations. So the fair value gap at the 50% mark is also known as the measuring gap. Okay, so what we do is we take another set of deviations and we measure from the low of the initial consolidation, which would be this little spike here. Okay, um, and we take that and we measure it. Um, I'll move this to deviations here in a moment, to the top side of the 50% fair value gap or the measuring gap. All right, so let's put that on deviations. And now we have deviation lines to the upside. Well, from this measurement, we can see that we've hit 2 deviations, okay, and then fell back over. Well, we can expect 3 to 4 deviations out of this move, okay, um, if everything works out the way that I expect it to. So we can look for at least 3 deviations, and we could possibly get 4. Okay, 4 puts us up at pretty close to a big round number at 47,953, which is right at that 48,000 round number, right? And the market likes to draw towards big round numbers. So I expect we could possibly make it to 4 deviations on this model. But for right now, I'm going to say 3 before we start a sell side model. So what do I do with that? Well, what I want to do with that is I want to take my uh, dealing range, and actually I'm going to leave this one here because I'm going to show you what I'm going to do with that later. We're going to take another um, dealing range and we're going to run it from this low because that's going to stay our low, and we're going to run it to 3 standard deviations. Okay, and we're going to put that there. All right, now I can take my deviation lines off the chart. All right, and until we break through that 3 deviations, then I can go back and redraw the deviation lines to find out where 4 is. But I know it's right up there around uh, the $48,000 mark, right? So I'm going to take my deviation lines off the chart now to clean this up a little bit because we don't need them anymore. All right, and this dealing range, this is our expected final dealing range, right? We're looking for the high of the dealing range. I'm going to change the colors on this. Oops, that's not what I wanted to do. Let's open that back up. Change the colors to that. Okay. All right. So that is our, let me lock this in, expected move before we start a sell side model. Okay. So until we hit this, I'm going to assume that we are in a buy side model unless something else happens. And I'll show you what that is. But for now, I'm going to hide uh, this quadrant because I can crap, lock it, hide it. There we go. All right. So what do I need to see for me to think that we're going to go up to that 3 deviation move? Well, the measuring gap, just like the breakaway gap, should never be rebalanced completely. Okay. So that would mean that this fair value gap has to stay intact. Okay. And we have a very good possibility of this fair value gap holding if we get into it, because that 15-minute breaker bar is key. That 15-minute breaker bar is one tick away from the midline of that fair value gap. So these midlines are sitting on top of each other at the 50% dealing rates level, which is fair value or the division between premium pricing and discount pricing. Well, if we're looking to go long, we want to go long at discount pricing, but we may or may not get below the 50% model, uh, below the 50% line because of this breaker bar and the 1 hour midline of this fair value gap. This makes a very strong level that should hold when we come down to it to bounce off of. Okay. Um, Also, what is important to understand to not get in a rush for a trade that our expected move, okay, where we expect price to go, you will see that the 50% line of that is right where we're at. Okay. And we've got some consolidation here. Well, this is a place in price where you will see a good bit of consolidation. So come Monday, we could still consolidate in this area some more before making a move to head back higher or go lower. Now, if this fair value gap down here is inverted, then I don't think we're going to go higher. I think we will need to go actually lower to take out more liquidity to the downside. But that is the lower probability at this point for me in the way that I look at price action. The higher probability is we come down to 50% into this area and we bounce and we head back up to make new all-time highs again. So, but you know, if we start to move up from here, I'm still not going to be looking for longs. Okay. I may go short if we move all the way up to this fair value gap before rolling over and coming back down here, which is very possible. Okay. Let me hide this one again. All right. Because we're working with the 25% level here, right? Well, we fair value capped on the 15-minute chart below it, and that fair value gap held. So, but we did just sweep a swing low, okay? And we could move back up into and rebalance this 15-minute fair value gap, which would also put us right at the midline of this fair value gap, okay? So we could come up and take that before going down and taking more uh, internal liquidity, okay? Because there is a swing high here. So all we have to do is break the swing high, hit the gap, and that is external liquidity. This would also be external liquidity, but then pull back down to grab more internal liquidity before going and taking out the all-time highs. Okay. Um, so in a buy model, highs are external liquidity and lows are internal liquidity, and fair value gaps from the high are also internal liquidity. Okay. That's where the liquidity sits for the market makers to be able to use to move price where they want it to go. So um, that's pretty much what I'm looking for now. I'm not looking to go long on this level because we haven't come down far enough for me to expect that move. Now, if we do move up after taking this swing low here and we invert this gap, yes, then I will be looking for us to move towards a higher target and would be taking longs from there. Okay. Um, we'll just have to see how it works out on tomorrow on Monday or subsequent days after that. Okay. that's pretty much how I look at the market. I wait for these levels to be hit before I decide to take a trade, and I kind of see what the reaction is at those levels before I trade. Now, this, if we come down into this, I'll just take a long as, as soon as we hit it. I don't need to see a reaction here. Okay. If we get up here, then I need to see a reaction. You know, do we bounce off of it? The SMAs start aligning for shorts again, or do we invert it? And then I would certainly be looking for a pullback into that inverted gap to then go long and take out the high and move higher. Okay. Um, Now, with my dealing range, I have this dealing range which is set into quarters. Okay. So we have four quadrants: extreme discount. I'm sorry. Let me pull it down. There we go. Extreme discount, discount, premium, and extreme premium. Okay. Um, but that's not as far as I break these down. Once I find the gap on this one, or the dealing range on this one that I like, then I want to break it down even further. And I have one for that where now it's broken down into sixteenths. So each major quadrant of the dealing range is also broken down into quarters. Okay. So 25%, 25%, and the red line is 50% of this top quarter of the dealing range. Okay. So we've broken it down into sixteenths. Now we're going to lock that in so we make sure it doesn't move, and then we're going to sync it on our layout for the 2-minute chart. Okay. So on the 2-minute chart, now I have all of my levels that I can trade off of along with my SMAs. Now on the 2-minute chart, all of my order blocks and these order blocks and the fair value caps are 15-minute levels. Okay. And um, the breaker bars are on the 2-minute chart level. Okay. So I have a higher time frame on this chart. I have a higher time frame on this chart for the fair value gaps and order blocks. Okay. It just kind of helps me look for higher time frame levels and then trade off of the price action of the 2-minute SMAs. Okay. Um, so this is another reason why I would, we had this 15-minute fair value gap here. We see that on the 2-minute chart. So if that midline holds and we break down from there, then I'm looking to come down to that 50% level down here into, there's also a 15-minute fair value gap there, right here. Okay. But there's the hourly gap and that 15-minute breaker bar that we expect to hold. So that's kind of what I'm looking to see. This might happen in the overnight, in the Asia session or the London session. So as soon as the market opens Sunday evening at 6 p.m., I will be setting a limit order um, at this midline here, which is 46,941. Okay, so we will just break back below 47,000. Uh, I would expect just for momentarily before heading back up. Okay, and that limit order is going to be set before I go to bed with my standard stop 40 points and my take profit above the all-time high. Okay? Because London could certainly, I mean, what are we looking at here? We're looking from where we are, well, let's just go from here because that's where we want to trade from to the all-time high is almost 400 points. Okay. We're not going to get there in Asia or London, but we will be working our way up. And once we leave this, once we hit this area and leave it, I would not expect price to come back to it. Okay. So I want to know that if we do come down here in the London or Asia session, because that is from current price about 100 points. And that's about as far as Asia will move. Um, so it'll be interesting to see, but I want to know that I'm going to get into that trade right there with my risk. Okay. And if we were to put a quick long position box on that trade, um, so we'll get in just before, and we're looking for about a 40 point stop is what I have, um, which puts us boop, 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 right around there, which doesn't quite cover the 1 hour fair value gap, but I'm okay with that because again, I don't expect this fair value gap to be completely rebalanced. Okay, a measuring gap should never be rebalanced before going and making new highs. Okay, so my typical 40 point stop for that is perfectly fine. And if we're going to go break new highs, you can see that my risk reward is already close to a 10 to 1 on that trade. Now, that trade, if we hit it in the Asia or London session for the entry, we could be holding that trade through the entire day, okay, on Monday. Um, and we'll just have to see. And if it looks like we're actually going to get up here and run higher than 380 points from that location, we can always put our deviations back on, um, or put uh, this fib back, or our expected dealing range back on. And what we can be looking for there, um, well, that would be the high. Okay, the 25% of that is right here. We could go to halfway between uh, the 25 and the 0 of the dealing range, or we could just go ahead and set our target all the way up here. But 546 is about the top of the range for uh, YM to move in a day. Okay, so I like the 50% of this quadrant here, um, and may even front run that a little bit and just take 500 points. Um, if we could get that, I mean, that's amazing. That would be almost a 12.5 to 1 trade. So that would be pretty awesome, and we'll just see what happens. But this order will definitely be placed. Now, again, I use TradingView for my charting, so my trades will actually be placed on um, NinjaTrader, where Gamma X uh, tools are used. Again, go check out their website that explains to you what their tools are, and what they can do for you in your trading. And it really can take all the emotions out of your trading, um, but you can turn the bot on when you get to the levels you're looking to trade at, and then take the emotion out. Okay, just let the bot trade your setups when those signals are printed, and let it do its thing, right? So I will be on Monday morning live in the Discord, as I am pretty much every day of the week, uh, and on YouTube, of course. So if anybody wants to check out the Monday stream, just stop on in and see what's going on. I'm going to hide this one again because I just don't need. Well, that was that. Doi. Okay, so the fib retracement hide. Okay, um, and then the long position we will leave on just so we can take a look and see what happens with it on Monday. All right, so that is pretty much it for the Friday review and for the Sunday prep for next week. Um, you know, we'll have to see what the market does, but I have a pretty good uh, pretty good theory on what I think the market is going to do, and we'll see if I'm right. You know, dealing range theory, I haven't always been right, but I'm getting better at being right at guessing price action before it actually gets there. Um, and I say guess. It's a very educated guess, but it's still a guess. We never know where price is going to go. We just have to follow the clues uh, and jump on the coattails when we see it happening, right? So, all right, that is it for me this evening. I hope this was informative and hope everybody has a blessed rest of their weekend. Go out and touch some grass. I am probably headed back to the golf course tomorrow for a little bit more practice. I think sometime next week is when I'll be back on the course to play around, and maybe we'll shoot a little short video of us out on the golf course. Until then, uh, everybody have a great rest of your weekend, and I will see you on Monday.